You are welcome to today's lesson. Today we are going to discuss the one of the exercises for the sole proprietorship. Right? Shall we go for the question? In question, they require the balance sheet and P&L to be prepared. I have taken the balances in the extracted the balances from the trial balance and put it in the T accounts, right? These are the T accounts balance as per the trial balance. Shall we go and see the what is the additional information? In the additional information, they says the stocks balance as at 31st third 24 has been valued at 13,000. That means closing stocks, right? Closing stocks to trading account, trading and closing stocks to balance sheet, right? This is to balance sheet. What is the debit trial balance to trading? How much? 13,000. Trading account is credited 13,000 balance sheet, right? This is the adjustment for the number one. Number two, goods sent on sale or return basis having a cost of 5,000 has been recorded as sales, right? 5,000 it is recorded as a sales, right? Its selling price is 6,000. It has not been sold yet. Then we have to remove it from the stocks 5,000, right? Closing stocks here 5,000 and 5,000, right? So we are removing the sorry we are adding the closing stock because the sales not done, right? 5,000, right? 5,000 cost adding to this amount, right? Balance sheet, trading and balance sheet, okay? 5,000 and 5,000 and other part of goods sent on sale or return basis having a cost of 5,000. 5,000 cost we have added to the closing stocks, right? We have added to the closing stocks because it has not been sold, right? It is in the stock. It should have been in the stock. And selling amount is 6,000. We have made a sales include the 6,000. We have to remove that 6,000 from the sales, and from the it was under credit sales, for we had to remove it from the debtors also. Debtors account credit, right? Credit sales here debtors, right? Debtors, okay. So that is there. And second, that is you understood the sales. We have sent the goods on sales or return basis, right? That means on sale or return basis means if you sell it, otherwise if you couldn't sell you can return it back. So these 200 sales includes 6,000 worth 6,000 sales which has been sent on the basis of sale or return basis, right? That has to be removed from the sales 6,000 because the sales was not done actually. So sales account debit and credited to the debtors account, right? Debtors account credited, and same amount should be added to the closing stocks, no? Closing stocks account debit to the balance sheet and credited to the trading account closing stocks, right? So that is all. The owner has taken 2,000 worth of goods for his personal use. Owner has taken 2,000 worth of goods. Purchase account has to be reduced, right? Drawings, saying drawings account debited 2,000 purchases. purchase account, right? He has taken the goods, the proprietor has taken the goods for his personal use, so that is not a sales, so that is a drawing. So drawing account debited and we are deducting from the purchase account is credit. Okay. And third one is the owner, third one only that adjustment. And fourth one is while 5,000 worth of stock has been damaged goods, right? Damaged goods, we had to deduct it from purchases. Damaged goods 5,000 and purchases account 5,000. Okay. Okay, then what they say is um charge, the insurance company has agreed to compensate 60% of it. 60% of it insurance company had agreed to pay back, right? So insurance receivable bill account debit 3,000, right? Goods damage account credit. Damage, this is insurance, right? Because 5,000 worth of goods got damaged, so we have removed from the purchases 5,000 and we brought it to damaged account 5,000. From that 5,000, 3,000 worth of claim, insurance claim is satisfied. So it is 3,000 has to be removed from damaged goods and we have transferred to the insurance receivable account. Okay. And fifth one is write off 1,000 as a bad debts. 1,000 as a bad debts. Where is a bad debtors? 1,000 from the bad debt. Debtors account debit. Bad debts account credit. Sorry, debtors account credit. Debtors account credit and bad debts account debitor. Right? Debtors 1,000. Okay. Debtors. Here you said bad debts because we have removed the debtors 1,000 bad debts, right? And we have inserted to the bad debts account debited 1,000, right? Because he become a bad debt. So further they says make a provision of 5% of the remainder as a doubtful debts. What is the remainder amount? Carried down amount is 3,000, right? Here brought forward amount is 3,000. On the 3,000, 5% is 150 provision for bad debts. We will say provision for bad debts or allowance for bad debts, right? Account credit, bad debts 150, bad debts account debited, provision for bad debt. Okay, that is the entry. And seventh is accrued expenses as at 31st third 24 were electricity bill 1,000. Where is the electricity bill 1,000? Accrued expenses credited electricity 1,000 credited and electricity account credit accrued expenses 1,000, right? And 1000 and carriage inwards 2000. Carriage inwards, where is the carriage inwards? Carriage inwards 2000. Right, debited, accrued expenses, carriage inwards, words 2000. Okay, credited to the accrued expenses. And third, there was a prepaid expenses of 2000. For have you understood the accrued expenses? Accrued expenses in the sense we have to payable at the end of the financial year. This is at the end of the financial year, electricity bill payable 1000. So already paid 5000. So we are adding that 1000 payable, then 1000 electricity bill we have to debit it. Accrued expenses means we have to pay all the payable at the end of the financial year. We are put into the accrued expenses. So accrued expenses is credited 1000. Like that, carriage inwards also, we at the end of the year we had to pay 2000. So carriage inwards already had a balance of 2000. That means we have paid. So payable is 2000, another 2000. We are adding that 2000, right? So accrued expenses has to be credited because payable are credited. Okay, 2000. Understood? And there was a prepaid expense of 2000. There was a prepaid expense of 2000 for advertising expenses. Where is the advertising expenses include 3000, includes prepaid. We have paid for the next year advertising also. That amount contained 2000, so we have to eliminate that 2000 from advertising expenses. We are eliminating, and debited to prepaid expenses. Prepaid advertisement, advertisement account, debited 2000, right? Advertisement prepaid. Okay, we have paid in advance. The next year advertisement expenses we have paid this year, current year. So that is the asset for us. So we have treated it as a current asset. Okay. Rent income received in advance as at 31st third 24 was 4000. Rent income received in advance. Where is the rental income? Whereas the rent income is 9000. Out of 9 we have received the next year in advance 4000. We have to remove it because we have received amount, we have sold it in the current year. No, the accrued policy says whatever income relevant to the current year only shown to the current year. 4000 relevant to the next financial year. So we are eliminating that one. That is rental income pay received in advance, right? Rent income received in advance account credited 4000. It is the payable, right? Rent income, right? This is payable, right? Okay, so here debited and here credited. So on the in the ninth requirement says 5% depreciation on furniture and fitting. Furniture has a 10,000 depreciation account. Open a depreciation on furniture, depreciation on motor vehicle, and accumulated depreciation on furniture, accumulated depreciation in motor motor vehicle, right? 5% depreciation. Depreciation mean depreciation account debit 500, right? Accumulated depreciation, and accumulated depreciation of furniture is depreciation 500, right? That is 5% of 10,000. Then another one says 10% of vehicles, right? 10% of vehicles, motor vehicles. Motor vehicle, what is the cost? 75,000. What is the 10%? 7,500. Depreciation account debit 7,500. Provision for motor vehicle account credited 7,500. Depreciation adjustment, you know, no? Depreciation account debit 7,500. Depreciation, accumulated depreciation account credit 7,500 for motor vehicle, right? Furniture account, depreciation account which goes to the profit and loss account debited, and accumulated depreciation which goes to the balance sheet is credited. Okay, so we have made it. Okay, now we balance it. We have done the calculations, we have completed the additional informations, and now balance it. Purchase account 80,000, 80,000, then 73,000. Brought forward, right? Brought forward purchase account 73,000. Another one line more needed, right? Purchase account, purchase account is 73,000, right? And sales account, carried down, balance is 200,000. Brought forward 194,000, right? 194,000. Sales account 194,000, right? Opening stocks 8,000. Trading account 8,000. Opening stocks 8,000, right? 8,000, right? Net sales return, trading account 10,000. Sales return 10,000. Yes, then 184,000, right? And advertisement expenses P&L 1,000, 3,000. This is 3,000. P&L advertisement. Mm, 1,000, right? 1,000. Okay, 1,000, right? Carriage inwards 4,000, 4,000. Trading account 4,000. Carriage inwards 4,000, right? This is 77,000. Okay, trading account. Electricity P&L 6,000, 6,000, 6,000. Electricity bill 6,000. And salaries and wages P&L 15,000. Salaries and wages. And wages 15,000. Salaries and wages. And cash, that is carried on 13,500, brought forward 13,500. That is current liability. Cash 13,500. Right? Okay. Bank loan 10%. 10% bank loan. That is carried down 50,000. Right? Brought forward 50,000. Bank loan is non-current liability. Bank loan 10%, it is 50,000. Right? Bank loan is 50,000. Then 10% bank loan in the sense interest payable. 10% we haven't come across in the trial balance any interest paid. So interest expense account, the rest expense account debit 10% on 50,000 is 5,000. Interest payable will credit 5,000 interest. Whereas interest we had to pay. Still we haven't paid the bank interest. That's what interest income payable and paid and payable, right? We have put it there. Let it be there in this thing. When we are balancing, we will balance it. Otherwise, there will be duplication of entries, right? So we came up to the bank account, right? Furniture account cost is 10,000, right? Land and building 150,000. This is carried down 10,000. This is carried down 150,000 and brought forward 10,000, brought forward carry 150,000. Right? We have taken that to the balance sheet. Next one, selling expenses P&L 4,000. Selling expenses 4,000. Right? That is correct. Debtors account carried down balance. Debtors carried down balance is 10,000. We had to deduct 3,000. We have to deduct a provision for bad debt. Let us keep a place for that. Okay, 3,000. Next one is creditors. Creditors is current liability. $26,500. Carried down 26,500. Brought forward 26,500. Okay. Okay. Motor vehicle 75,000. Carried down 75,000. Brought forward 75,000. Then motor vehicle 75,000. All the balances we are taking there. Rent income carried down, no, it's not carried down, rent income, PNL 5,000, this is 9,000, this is 9,000. Here we will say other income, rent income 5,000, right? And capital account, here we will say capital account 100,000, carried down 100,000, brought forward 100,000. Right, next one is closing stocks trading 18,000, 18,000, that is trading account 18,000. Trading account closing stocks 18,000, 18,000. Right, closing stocks balance sheet, that is also 18,000, carried down 18,000, brought forward 18,000. Closing stocks, stocks, stocks 18,000, 10,000. Drawings is a we have to deduct under the capital and so show it. This is owner's capital, so owner's drawings are shown under the capital. Okay, 2,000, deduct 2,000 from drawings. Right, damaged goods, PNL 5,000, 5,000, 2,000 damaged, damaged goods 2,000. Insurance receivable, carried down 3,000, brought forward 3,000. Insurance receivable, well, 3,000. Insurance receivable 3,000. It is an current live assets, right? Insurance receivable is current assets. Bad debts 1,150. That is to PNL 1,150. Bad debts under the selling and distribution expenses 1,150. Right? It is coming under the selling and distribution bad debts, right? And accrued expenses 3,000, carried down 3,000, brought forward 3,000. Accrued expenses under the current liabilities, expenses 3,000, that should come under the current liability. Accrued expenses are liabilities, current liabilities, right? Prepaid advertisement, right? Carried down, brought forward prepaid advertisement, prepaid advertisement, right? 2,000. This is the current asset, prepaid expenses, right? Bad provision for the bad debts, it is 150, brought forward 150, right? Here bad debts, under the bad debts you have to deduct and show it. That is 2,850. Right? Provision for bad debts. Bad debts you will show in the profit and loss account. It is an expenses. Provision for bad debts and accumulated depreciations, all the provisions comes, we will show it in the balance sheet by deducting the from the respective amount place, right? And next one is rent income receivable. Carried down 4,000, brought forward 4,000. Right? Rent income receive rent income received in advance, right? Rent received in advance. How much? It is a liability, 4,000, right? 4,000. And furniture depreciation, profit and loss account, 500. Furniture under the administration expenses, furniture depreciation of furniture, 500. Next one is depreciation of motor vehicle. Depreciation of motor to vehicle, that is coming under 7,000, come around 7,500. That is coming under the selling and distribution. This is also PNL, 7,500. Right? Accumulated depreciation of 500 furniture, we had to show it under the balance sheet, right? 500, right? Carried down 500, brought forward 500, and other one also 7,500 carried down, brought forward 7,500. That is accumulated depreciation for motor vehicle is 7,500. Land and building nothing, right? And interest expenses, interest expense, how much? 5,000. Interest payable, 5,000, right? Interest expenses P&L 5,000. Interest payable carried down 5,000, brought forward 5,000. We had taken. Now what we had to do is we have taken all the balance, we have balanced these OT accounts and taken all the balances to relevant respective final accounts, right? Now we can balance it. Here we will say 77 plus 8, 85,000. From 85,000 we are deducting 18,000. Then 67,000. Cost of sales is 67,000. Right? Then gross profit is minus 117,000 is gross profit. Right? Gross profit is 117,000. Here we will say 21,500. Right? Deducted. Here we will say 1,000, 4,000, 1,150 plus 7.5, 13,650. This is 5,000. This is 2,000. Right? We have to deduct all these things. right? Rather than we are mentioning here, we have to mention it in first column, right? 6,000, 15,000, then 500, right? So we had to 1,000, this is 4,000, 1,150 and 7,500, right? This is 5,000, right? This is 2,000. Okay, so what we can do is we can raise these all are taken now. So we here balance is 21,500. Here balance is 13,650. Here balance is 5,000. Here balance is 2,000. Right? And it's easy. And it's easy for us, for you. Right? So what amount we had to deduct it? 21,500 plus 13,600, 5,000 and 2,000, then 42,150 we have to deduct it from 122,000, right? From the 122,000 we have to deduct 42,150, that is 79,850 is the profit 79,850 plus 100 minus 2, it is 177,850, right? This is 50,000, right? This is 26,500 plus 3,000 plus 4,000 plus 5,000, 38,800, right? 38,800 plus 50,000 plus 177,850, 266,000. This is 500, right? 60,000 and 350, 350, right? 350. And other thing, here we will say 9,500, 150,000, 75 minus 7,500, 67,500. Then this one will, you say 9,500 plus 150,000 plus 67,500, right? 227,000. Okay, here other one is 13,500 plus 2,850 plus 18,000 plus 3,000 plus 2,000, 39,000, 39,350, 39,350 plus 227,000. 266,350. 260,350. It is balancing. Okay, this is balancing. Here, total assets. This is total assets. Total assets. Right? This is total assets. This is total liabilities. Total. This is total liabilities. It is total assets. Okay. Both should balance. Okay. Understood. So we have had we did all the adjustments, and I think, I personally think you would have understood. If you couldn't understand, you just go back and see this video again, and then of course definitely you will understand. Okay, so I hope to see you in next video also, in next lesson also. We are going to discuss another exercise. Okay, so if we do more and more exercises, then you will get familiar with the all the adjustments, and you will be in touch with the all the double entries. Okay, thank you. I'll see you in next video. Thanks.